So we all know that SCHD, the Schwab Dividend Equity Premium ETF, is one of the best dividend ETFs on the market, despite the fact that 2023 was not a great year for them. They still have a great dividend yield and a really strong dividend growth rate. But can we make SCHD even better? Is this dividend ETF a candidate for selling covered calls? We attempted to estimate this in the past, but now I have the actual historical option data to see whether or not it would have been successful or not. So the question, should you sell covered calls on SCHD, is not a question worth leaving unanswered. Let's look at what actually would have happened. What's up, you guys? Welcome back to the Average Joe Investor channel. As a reminder, this spreadsheet that I created and all of the other spreadsheets I create on the channel is available to you by joining the Average Joe Investor Patreon community. If you want access to all of that content, plus joining the Average Joe Investor Discord community and access to all of my income strategies, check out the link down in the description below. Okay, so this is the spreadsheet I created for SCHD. And what we're doing here, let me be very clear on the parameters of the back test here. What we did is we looked at the actual historical results based on price and dividend for SCHD going back 2 years, back to January of 2022. And we're testing the specific defined period, January 2022 through December 2023. The assumption here is that we're starting with 100 shares of the stock. So SCHD, as of the beginning of January 2022, was priced at $80.81 per share. So the initial investment was $8,081. And with this strategy, we're looking at two specific strategies. Strategy number one is we own 100 shares of SCHD at the beginning of the period. We do not contribute any additional money, and for all dividends that we receive during that time frame, we reinvest them immediately back into SCHD for more shares. Strategy number two, starting with 100 shares, we then would sell a monthly covered call at a price above the current market price. With that option premium we receive, we then reinvest it immediately back into more shares of SCHD. Fast forwarding every month, we're going to look to see, were we assigned on our covered call or were we not assigned on our covered call? If the answer is no, we sell a new covered call, reinvest the premium. If the answer here is yes, like it shows right here, if that happens, then the spreadsheet is already set up to calculate the assignment price and then to buy back in on the following day, the following Monday, at whatever the prevailing market price is. We've got our strike price, our expiration, our premium, then we have our shares owned with options and without options, and then our final portfolio value with no options and with options. Now you'll notice here up in the option strategy I have regular, and then I also have the drop down for aggressive. And when you do that, it's going to change the strike price and the premium. Essentially what I did here for the regular strategy is I looked at approximately a 15 or about a 12 to 20 delta. Because it's monthly options and there's not a lot of volatility and volume with SCHD, sometimes we had to adjust the strategy between a 12 and a 20 delta. That's considered a regular strategy. Then what I did is I took a more aggressive approach option here as well, aggressive. What this is whatever the regular strike price was, it goes down to 1. So if the regular strike price would have been 83 based on the delta, then the aggressive would have been 82. And then there's an adjustment in the premium as well based on the actual historical data. And we'll look at both scenarios to see which one of these works out better. And then of course we'll look at the graphs here. We're going to graph the portfolio balance and we're also going to graph the shares owned over time relative to the price. Okay, here's the regular strategy. Okay, so we're assuming an out of the money strike price in and around a 12 to 20 delta, depending on the market price. No assignments occurred in the regular strategy until right here in August. Okay, and you notice that when that happened, there was a reduction here in the amount of shares owned. Now we're still out ahead though. We have 105 shares versus 101, dropped down to 104 versus 101. And we also had no assignments here or here. We did get assigned again in November. We dropped from 106.5 down to 103.98. That's a big reduction in shares, and that's because the market moved. See, my strike price was 75, and the market ended at 76.94 right here, and the market went up the following day as well, so that affected how many shares we could buy back in. At the end of December 2022, 1 year in, we end up with 105 shares, 0.26 versus 103.54. We'll notice here we'll keep moving along down the year. Here we go. Our first assignment is in June of 2023 for that year. You'll see that the strike price was 73 and the market was at 73.34. Moving forward, we got assigned the following month as well in July. Our strike price was 74, market was at 74.97. So we got assigned there and we had a reduction in shares. Moving forward here all the way down to December. We got assigned in December as well. And this was a big one. Our strike price was 73 because the market was at 71.49. The market shot up to 75 during that time frame right here, and that resulted in a reduction of shares here as well. So at the end of the time frame here, at the end of 2 years, our final number of shares with selling options was 108.35 versus 107.439. And that only resulted in a difference in the final portfolio value of like 70 or 80 bucks. So from that perspective alone, it doesn't seem like the juice was worth the squeeze. There wasn't a ton of value in this strategy based on just these 2 years. That could be different if maybe we looked at 3, 4, 5, 6 years. This was only a 2-year because it takes some time to put it all together. Let's take a look at the graph here. You can see that the pink is with covered calls, green is without covered calls. You'll notice here that we were never falling behind with this strategy, but we were never really getting far ahead and staying ahead because of those assignments that brought the number of shares down. Here's a look at the shares owned with covered calls and no covered calls. And you can also see in red here, this is the price of SCHD. And you'll notice here that these big assignments that occurred in green, which is the reduction in shares here, and then here, and then here, all of those correlated with a drop in the price and then a rapid increase in the price, which resulted in those assignments. Also, obviously, looking back in time, we can see that maybe there were ways for us to adjust our strategy whenever there was a large drop in the price. But hindsight, of course, is 2020. So now that we've looked at the regular strategy, let's take a look at the aggressive strategy and see if it results any different. Okay, so we're more aggressive on the strike. So it may result in more assignments, but we're also collecting more premium as a result. So maybe we can get farther ahead with this number of shares that we own. So not assigned in January or February or March, we're going all the way down. Our first assignment occurs, even with this a more aggressive strategy, first assignment occurs here in August, okay? At this point, prior to getting assigned, we were at 101 shares with just owning SCHD. And then we were at nearly 108 shares by selling the covered calls. Now, after this assignment occurs, we do drop down to 106,671 here. Let's see when the next assignment happens again. We're at September, October, November. We have an assignment that occurs here in November 2022. And at this point, the number of shares owned was 102.59 or 102.6 for no covered calls and 109 with covered calls. Now, this assignment was pretty large here because the market price was 76 or nearly 77 and our strike price was 74. That dropped us from 109 shares down to 105.5. So that was a pretty significant drop there. Let's keep moving forward here. Our next assignment occurs based on actual historical data. Not for a while. Here we go. In June of 2023, our strike price was 72. Actual price at the end of the period was 73.34. Now at this point, prior to being assigned, we were at 104 for SCHD, no covered calls, and 112 with selling covered calls. Now moving forward here to July, we got assigned again. Market price was 74.97 versus 73 for our strike price. So that dropped us from 113.69 down to 111. Moving forward here, all the way down to October, November, and December, we got assigned here and here. Now, prior to this November assignment, we were at 114 on the shares versus 106. That dropped us down a little bit, 114.27. And then we were at 115 right here at this assignment in December, and that dropped us down to 111. So at the end of the period here, December 2023, the result here is better with this more aggressive strategy. We're at 111 shares versus 107, and our portfolio value was just under $8,500 versus $81.79. Here's a look at the graph of the portfolio results. This strategy, the more aggressive strategy, resulted in higher levels of shares, even though some of our assignments were more significant and brought our share count down much further. Here's a look at the shares owned. You can see that these assignments that occurred here, and then right here, these large assignments did result in a significant drop in share count, but we were still far ahead of not selling covered calls at all. And this is just a 2-year time frame. Like I said, these results could be a little bit different if we went back 3, 4, 5, 6 years, and the goal will be to build some of these out further to give you more accurate information, because we shouldn't make investment decisions based on just 2 years of data. So should you sell covered calls on SCHD? It looks like the data supports doing that and being successful, whether it's a regular or a more aggressive strategy. And as a reminder, this spreadsheet that I created and all of the other spreadsheets I create on the channel is available to you by joining the Average Joe Investor Patreon community. If you want access to all of that content, plus joining the Average Joe Investor Investor Discord community and access to all of my income strategies, check out the link down in the description below. Hopefully you found some value in this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you. Have a great rest of your day, and thanks for watching.